There's the move, 50 basis points. The depot rate goes from 150 to 2%. The main refinancing rate goes from 2% to 250. The marginal lending facility goes from 225 to 275. Just to breathe some life into the price action, euro dollar right now 106.24. We're down about 0.5%. Going to go through the headlines. Bramo's working with me on that, but just to give you the top line right now, a 50 basis point move from the ECB, and ultimately, Lisa, expecting to raise rates even further.
And expecting to reinvest PEP proceeds until at least the end of 2024, which is sort of interesting to me, with continued flexibility in those reinvestments as needed. So again, trying to support the Italian bond market and some of the other areas as they try to move away from their policy. They also are going to take a meeting by meeting approach. This is the sort of blah, blah, blah of these types of things. They see inflation at 8.4% in 2022. That is an upgrade from a forecast of 8.1%, even with the drop in natural gas prices.
We'll work through the projections, but I just want to bring you some news on the asset purchase program. We were looking for some key principles for how they'll unwind that. It will decline at a measured, predictable pace from March. They go on to say they will stop reinvestments of some bonds maturing under the asset purchase program. So, Tom, we're going to get a little bit more detail on this from the president of the ECB in about 30 minutes' time.
It's a QT kind of angle here. The inflation jumps are absolutely stunning. And I'm sorry, I'm going to say this, and Madame Lagarde may disagree with me. These are the headlines of a war economy. When I'm looking at these inflation numbers that are creeping out here, you can pick any one of the headlines. These are substantial jumps, not to double-digit inflation, but to high single-digit recalibration.
Look at that for guidance, Tom. The ECB rates still need to rise significantly, but at a steady pace. And Lisa mentioned the inflation forecast for next year go beyond 3.4%. In 24, the previous forecast was 2.3. They're at 2.3% in 25. Now, you're probably wondering, what use is that, 2025? I think it gives you some indication of how much work this ECB still thinks they need to do to get inflation, Lisa, anywhere near 2%. And that is over a long, long time horizon.
This is much more dire than what we heard from the Fed yesterday. They see inflation coming down much more quickly than what the ECB is looking at. The idea of inflation ending next year at 6.3% versus a prior forecast of 5.5%. And then, as you say, down to 3.4%. This is not sufficient for what they want to see if they keep that 2% goal. So it suggests they have a lot more work to do, and it suggests they believe that rate hikes and the balance sheet roll-off is going to be the way to do it.
GDP call for 23, 0.5%. Previous forecast, 0.9. There's more headlines coming through on the asset purchase program, so we'll work through that. I want to cross over to the ECB to catch up with Maria Tadeo for her take on this. Hey, Maria.
Well, Jonathan, to me, this is a classic example of how the European Central Bank works. When you look at the rate hike, they went for 50 basis points. This morning, it was very clear, the mood, the animal spirits, it was the inclination for the 50 basis points. At one point, debated 75, but of course, they stuck with the 50. But to me, the real takeaway is that QT. It's early QT. Again, also that signal that more rate hikes will be needed and are to come. To me, it does seem that is the hawks of the steering wheel at this point.